And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Big week for IPOs. We have Airbnb and DoorDash going public. We're going to be talking about all of that, as well as what's going on with SPAX, special purpose acquisition vehicles, or SPAX as they're known. Our guest today, three of the best in the business, my friends. Kathleen Smith from Renaissance Capital, who runs the Renaissance Capital IPO ETF, a basket of the last 50 IPOs. Paul Delacqua, excuse me, Paul, who runs the Defiance Next Generation SPAC ETF, and Dave Nautic from ETF Trends. Welcome, everybody here. Kathleen, let me start with you. Big week for IPOs, and it is remarkable to me that IPOs have had such a stellar year, given all of the COVID madness. We've got 194 deals, raising $67 billion, not even including what's going to be happening this week, the best year since 2014. Just briefly summarize, why did we do so well this year? I think a lot of people are rather amazed about that.
Well, a couple of things. We have a low interest rate environment that is very good for growth stocks, which tend to be the major constituents in the IPO market. But also we have the COVID situation, which really accelerated the move toward the digital economy and toward vaccines. So these new companies are also major constituents in the IPO market. So those two things have really accelerated the returns. And the returns also are the fuel that drive the IPO issuance engine. So it's been very good for the returns on the ETF, and we expect to see more opportunity with Airbnb and DoorDash. The way this index works is they become a part of it, especially these large ones, very soon. So we have an early, heavier weight in these new companies than most other ETFs.
And congrats on the Renaissance Capital IPO ETF, $500 million now in assets under management. I know you've sort of languished around with $100 million for years, and you've hit it big. And not just you've seen inflows, not just because the prices are up. And could you clarify how quickly will Airbnb and DoorDash actually go in? Assuming Airbnb goes public, say on Thursday, as it planned, how quickly would it go into the Renaissance Capital IPO ETF?
It will go in sometime after 5 days of trading between that period and when we do the rebalance, which is happening on December 18th. And this is a transparent ETF. We will be sending out an announcement several days ahead of time about their inclusion and when they'll be included.
Okay. Paul, it's been a remarkable year for SPACs as well. I mean, we all know SPACs had a kind of not a great reputation a few years ago. That's changed considerably in the last couple of years. 200 SPACs raised $64 billion. It's remarkable. SPACs raised about the same amount of money this year as the IPO market did. So a few years ago, they were hardly on anybody's radar. Now they're back. Why have we seen this sudden sea change in the SPAC business in the last 2 years? What has happened that has made SPACs an appealing, at least to many people, alternative to IPOs?
Yeah, and Bob, I agree with Kathleen, too. The rate environment has a lot to do with, I think, IPOs in general, but also SPACs. And before 2017, I think you got to go back to 2012 to even recognize a name that actually derived from a SPAC, and that was Burger King back in 2012. And to your point, I think a lot of the names were unknown. A lot of the management teams creating SPACs were unknown. But what's happened over the last 2 years is you've seen some high-profile companies actually choose to IPO via SPAC. Virgin Galactic being one of them. They IPO'd last year. They got a big space test flight coming up this week, so a lot of eyes on them. DraftKings has been the big one from 2020, and anyone who's into football, fantasy sports is the name that everyone is aware of. And Luminar Technologies, actually a pretty high-profile company that IPO'd last week, was also via SPAC. So you're seeing high-quality companies choose to go this route. But secondarily, and maybe even more important, it's the SPAC sponsors. You're seeing much more credible investors step into the space. And you look at a name like Bill Ackman, who's raised $4 billion for an acquisition or a SPAC. Michael Klein, who is a Citigroup executive and is a renowned deal maker, is now working on his fifth SPAC. But also you're seeing very legitimate private equity firms, TPG, Apollo Group, Goldman Sachs has done a couple acquisitions. They're actually creating SPACs. And I think the way they're going to be thinking about using them on a go-forward basis as additional tools is going to even add more credibility to the space. It's going to continue growth. I think those are two of the big catalysts for what you've seen in 2020.
Dave, weigh in on this. I'm as impressed as anybody about the growth of SPACs, but we all know they had a sort of a bad reputation. Let's be blunt about it. Up until a couple of years ago,
Sure.
And the basic premise still is there, Dave. It's trust me, I'm famous. You know my name. I'm really famous, right? Did I tell you I'm famous? I can raise a lot of money because, hey, I'm famous. What could go wrong with this scenario? Trust me, I'm famous. Idea.
There's a reason why SPACs are different than IPOs. And fundamentally, SPACs let companies come to market with some pros and cons. They have slightly less scrutiny. The amount of work it takes to get a SPAC merger done into a SPAC vehicle is simply less exhaustive than it would be if you were going through the full IPO process. On the flip side, it allows a company that perhaps doesn't have a long operating history, but can say very positive and credible things about the future to actually come to market and talk about those things. Companies that come to market through a SPAC merger are allowed to do things like give forward guidance. And if you've ever been through the IPO process or invested in IPOs, they get locked down real hard. So you don't get to ask management companies about things like, hey, what's the pipeline look like for the end of next year? You do get to do that in a SPAC. So there's reasons why it's an attractive vehicle, particularly for smaller growth companies, often coming out of the private equity sort of train. And I think that's what we're seeing. SPACs are becoming this vehicle for companies to go from private to private equity to the public markets in sort of a long, thin line, if you will.
But what can go wrong with this? I'm sorry to be so curmudgeonly about it. I mean, first off, there's the obvious thing, which is neither SPACs nor IPOs are subject. They're subject to the laws of gravity like everybody else. If the market turns south or if the economy turns south, they're not going to do as well. That's kind of obvious. But is there anything that worries you about SPACs that could independently cause them to dramatically underperform? We've got over 200 that are sitting out there looking for targets right now. Are they all going to outperform, or are they going to do notably worse or better?
They're going to be winners and losers, and like any market that is disparate, right? Remember, a SPAC or an IPO fund is investing in all of them. They're not simply saying we're going to pick the good tech ones, but we're not going to pick this healthcare one we don't believe in, right? So in both of these, and that's been a great approach. I mean, I think Kathleen's fund's up over 100% this year. It's hard to argue with the returns we've seen, but with those, potential excess returns come obviously enormous risks. And I think it's important to point out that what you get in something like a SPAC or an IPO fund that's pooling these things together is sort of the last tail end of private equity, which tends to be related. So if you look at what's coming to market through SPACs, you're not seeing like a lot of utility companies come to market this way. What you're seeing is, internet companies, technology companies, biotech companies, firms that are out there on the cutting edge. And with that cutting edge comes the opportunity to get cut.
Yeah, that's a good point. Kathleen, give us a preview of 2021. The IPO market is certainly not going away. There's a couple of high-profile names coming. Give us a quick rundown of 4 or 5 of them and when we might expect to see something.
Sure. I will add that private equity and venture has had so much inflow into these asset classes that having the IPO window open and this new, better vehicle for a SPAC is helping this asset class, which basically has had locked-in capital and hasn't performed that well relative to owning public equity. So this is a great relief, I'm sure, for every venture capitalist and private equity firm to have these outlets for finding liquidity. As far as what's coming up...
Well, that's an interesting point. Before you get to your point about 2021, that's an interesting point. So you're saying that actually SPACs are good because it brings in other companies, but and maybe lesser quality companies that wouldn't have gone public or have not been successful going public. You're saying more SPACs actually makes IPOs look better, or am I misreading what you're saying?
Well, I'm saying that it's helpful to private equity and venture pools of capital because this is an outlet that has enabled them to find liquidity. They've pretty much only had IPOs, which are a much more discerning area of the market. So now they have this other access to capital. And so that should help them. From an investor standpoint, I think we have to constantly look at returns. And returns are what investors need. If a product is not producing those returns, then the product isn't of value to investors, where really the buck stops, I think. So you want to look at that and with a good dose of caution to make sure the IPO market just plain will shut down if returns aren't there. And that'll be true of SPACs too.
Yeah, it's a good point. Okay, let's go to 2021. Yeah, I'm sorry I interrupted you. Go ahead.
No, that's fine. We actually have, we mentioned DoorDash, Airbnb coming this week. We also have 3 other billion-dollar IPOs on the calendar before the end of the year. So in Roblox, we're going to see Affirm and Wish. And it's going to make this year a year with more billion-dollar IPOs than any other year we've seen in history. So a lot of big companies are coming out. They've been private for a long time, and now they're coming out in this better market. Beyond that, in 2021, we think that Elon Musk's SpaceX may try to tap the market. We're also hearing a lot about Stripe, which has a very high private valuation, the mobile payments company, Instacart, the grocery delivery company. And we think that Alphabet's Waymo, the autonomous driving division of Alphabet, will tap the IPO market in 2021.
Yeah, this is pretty remarkable. I'm wondering, Paul, if you think this space race or SPAC race with IPOs is going to continue in 2021. I spoke with BTIG the other day, and they said there's 210 SPACs that are out there right now seeking acquisitions. That's as many as happened last year or this year. That seems like a remarkable number. I mean, it seems unless the market turns down, SPACs are going to have at least as good a year as 2020. But what are your thoughts on this?
Yeah, and we partner with a firm called SPAC Research, so we actually have the deal flow right on our website, defiantetfs.com, that will actually show you how many SPACs are coming to market each day, and we're seeing 2 to 5, maybe not 2 to 5 a day, but 2, 3 a day that are coming live, and that's been a trend pretty much all year. So I think there's going to be that kind of growth going into 2021. And I want to pick up a point from Dave and Kathleen, because I think the private equity point is an interesting one for why SPACs are attractive, because for a lot of investors, the private equity market is something they can't tap into. So if you're a smaller retail investor, a smaller financial advisor, you may not have access to the best of breed private equity funds out there. What a SPAC offers up is sort of that private equity-like return. So yes, you're going to take a risk on a management team. Yes, they have to perform in order to seek those returns. But when the winners tend to win, they tend to be pretty outsized returns. So I think that's what the appeal of a SPAC is. And I think what you've seen from a return perspective from the actual SPACs and then the actual post-IPO SPACs, like so when they've actually merged with a target, the winners have won in a big, big way. So, I was thinking on the ETF, exactly as Dave alluded to, you're going to have the winners in there, but you're also going to have some losers. But the diversity of the ETF will hopefully keep up with a return profile that's similar to a private equity-like return for investors.
Yeah,
but we think that trend.
Kathleen, let me ask you about. Okay, Kathleen, let me ask you about the IPO ETF. My colleague in the segment I was just on the air with her asked me whether or not you would ever consider including SPACs in the IPO ETF. Would you ever consider doing that? And if not, why not? Or is that a
in this current
she
product,
asked me, I don't know.
Our rules say you have to be an operating company, and it takes almost 2 years for a SPAC to turn into an operating company. So under the current strategy that we have, SPACs would not be included in this index. We're interested to see how the SPAC ETF performs and the strategy behind that. I think, maybe you're digging into some opportunity there, but our existing product is going to be purely IPOs, regular way IPOs.
Okay. Dave, let me just, while I have you, ask you very briefly your thoughts on the remarkable year for ETFs in general. We passed $5 trillion in assets under management, huge inflows in the first part of the year into bonds, but now huge inflows into equities, value. Small caps have seen huge inflows recently. Could you wrap up 2020 for us and give us a quick look at 2021?
Sure. I mean, Bob, we talked about this at the beginning of the year. Anytime we see significant market volatility, we see the same thing happen since 1993, which is high fee, low-performing active traditional mutual funds bleed assets like no tomorrow, and that money shows up for the most part in ETFs. That's precisely what we've seen so far this year. It's going to be record inflows by the time we get at the end of this year. It's going to be hundreds of billions of dollars, if not close to $1 trillion out of traditional mutual funds overall. That's just a story we see over and over again. The structure is better for investors. It tends to be cheaper. It's always more tax efficient. I see absolutely no reason that's going to change next year.
Okay. Thank you, everybody. This has been very interesting. That does it for this week's ETF Edge. Remember, you can see all of our videos on our website, etfedge.cnbc.com. Now, I want Paul to stick around because I want to pick his brain a little bit more about the future of SPACs because there's so much interest in that. That will be in our ETF Edge podcast, a little extra that we give you every week on that ETF podcast. The week after, we'll be talking about environmental, social, and governance trends and what that means for ETFs in 2021. Don't miss that. Everybody, have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.